Do you think investing in big banks is always safe? Does Bank of America still have the strength to be a top investment pick, or is it just riding on its legacy? By the end of this video, you'll know whether Bank of America is a solid buy or a quiet buy. You're watching Investment Matters, where we break down the market in simple words and deep insights. Let's dive straight into BAC. Founded in 1784 as a small bank, today Bank of America stands tall with a massive $273 billion market cap. It's not just a bank, it's a global financial backbone. BAC operates across retail banking, business banking, investment banking, wealth management, and even international finance. And if you think it's all hype and no substance, wait till you hear the numbers. Let's start with valuation. BAC's current PE ratio is just 11.2, and its forward PE is even more attractive, only 9.91. That's a major green flag for value investors. In a market full of overhyped stocks, BAC seems like a hidden gem. Now let's talk performance. BAC stock is down just 1.9% over the past year. Sounds boring? Maybe. But here's the twist. Its RSI is 34.6, which puts it in the oversold zone. That means it might be ripe for a comeback. Its beta is 1.25, so yes, there's some volatility, but not the scary kind. Think of it as a fair trade-off between risk and reward. Now, let's get to the real engine. Earnings. BAC reported $96 billion in revenue and over $25.5 billion in net income. Its EPS, earnings per share, came in at $3.21, and here's the kicker. Operating margin is over 30%. That means for every $100 it earns, $30 turns into real profit. But wait, there's one concern you should know. BAC reported a negative free cash flow of about $8.8 billion last year. However, it holds over $748 billion in cash and short-term investments, giving it a rock-solid liquidity position. So despite the FCF dip, it's financially healthy and stable. Next up, ownership. A massive 66% of BAC shares are held by institutional investors. That includes mutual funds, pension funds, and hedge funds. And let's be honest, these big players don't throw money without solid research. That's a big confidence booster. Now, if you're a dividend lover, here's the part that'll make you smile. BAC pays an annual dividend of $1.04 per share, with a yield of 2.89%, and it's been growing at 8.5% per year. That's not just passive income, it's growing passive income. So the big question, should BAC be in your portfolio? If you're a long-term investor, if you like strong, stable companies, if you're hunting for the perfect combo of value plus dividends, then yes, Bank of America could be a solid fit for you. But hey, short-term traders, this one might test your patience a bit. The turnaround could take time. So what do you think? Is BAC a hidden gem or just another big-name bank? Let me know in the comments. I'd love to hear your thoughts. And if you enjoyed this deep dive style of stock analysis, don't forget to subscribe and hit the bell icon, because in the next video, we'll be decoding a stock that jumped 200% last year and is still considered undervalued. Stay tuned to Investment Matters, where analysis is simple, sharp, and to the point.